Welcome to CNBC.com. I'm Frank Holland, anchor of Worldwide Exchange. Today I'm talking to Dave Sharp, director of ETF Capital Markets at Vanguard, about the action in the ETF market this week. Dave, thanks for joining us.
Yeah, thanks for having me, Frank.
Why don't we start off with the trends that you're seeing specifically this week? Of course, this week investors, they weighed Middle East uncertainty following the U.S. strikes on Iran.
Yeah, this week we've seen kind of continued trends that we've seen throughout this year, which is a penchant towards the more safer assets within the asset classes. When we look at equity, we see that the 500 index funds, the large cap funds, continue to see flow throughout the entire year and in through last week as people look for that protection of kind of those high quality companies. On the fixed income side, continue flow in both the aggregate funds, which are large, total bond market style ETFs, continue to be in the top 5 for flows throughout the year. And what we've continued to see there in that space is some of the ultra short products, especially in the government space, be leaders in the ETF flows for fixed income. We're lucky to have a new entry in that space as of February in our product BBIL, which is our 0 to 3 month Treasury bill ETF, which we've seen bring in almost $1.8 billion just since February as that space continues to see activity.
I want to talk to you about bond ETFs in particular. We've seen a downside move in bond yields over the last couple of days. On Friday, we had PCE. That could impact yields either to the upside, possibly to the downside. What trends are you seeing specifically this week when it comes to bond ETFs?
Yeah, so we continue to see, again, that so much of the assets continue to be in that safe, ultra short space, low duration space continues to see activity where we've seen, again, flows there that were recognizing what we've seen throughout the entire year and see that continue as people are just looking for that safe place, somewhere where I have a really low duration, 0.1 year duration in these products, but I'm still yielding, close to 4.2%, is really impressive for that space right now. And we continue to see activity go that direction.
Are there any particular ETFs that you see investors going into, or the ones that are seeing the biggest inflows this week that are playing that trend?
Yeah, I would say, the core flows, the core assets continue to be where we see a lot of growth. So, something like the 500 index, VOO, continue to have a good week this week. And we do see assets in BND have had a positive week, as well as in that ultra short space, as we mentioned. But the broad market that we continue to see still is pointing towards those low cost, broad, diversified funds. When we look out, we broaden out throughout the year, there's only about 1.8% of the ETFs in the space that have an expense ratio of 3 basis points or less. And we've seen the flows, about 27.6% of the flows goes towards those products. It's still kind of that penchant towards that core diversified asset. Even with, tactical flow, we still continue to see flow go into those core products.
Can you give me an example, a couple ETFs that you're talking about with that low cost dynamic?
Yeah, Vanguard, we celebrate being a leader in that space for the low cost, broad, diversified. So our total stock market ETF, VTI, our total bond market ETF, BND, as well as total international VXUS, has all seen, really strong flows over the last month, including the last week.
All right. We're about to enter July. So July, historically, at least over the last 10 years, has been the strongest month of the year. The S&P up on average just over 3% over that time. If you're an investor that wants to play the idea that even though the S&P is pretty much at a record high, that it has potential to go even higher, what ETFs would you recommend?
Yeah, it's tough to deny, a product like VOO, which is going to focus on the 500 index and only 3 basis points with a really strong tracking error record. VTI is certainly one that we bring attention to as well as the total stock market, just because that does give you broader diversification going down into mid cap and small cap. But international has been a really interesting space this year where we've seen actual outperformance in the international assets, which we haven't seen, for a couple of years. So when we see those products, the VXUS has had a really strong year. We've seen Europe have a strong year. So our product, VGK, our Europe ETF, has been really strong there. So really those kind of, again, those core assets continue to be an area of focus.
When you say really strong, you're saying in the first half of the year, because we're basically at the halfway point of the year right now.
Yeah, that's right. Yeah.
All right.
Comparable to, previous years, we've seen it just better out, performance, especially during, right after the tariff announcements, close to 90 days ago, where we went into the pause. Then the U.S. market really started to recover a bit. But in the beginning of the year, international was outperforming the S&P by over 10%. And we did see some increased flows during that time period.
All right. So again, we're going into July. Historically, at least over the last decade or so, the best month of the year. Are any other ETFs that you would recommend to play the current market conditions? Again, with the S&P very close to an all-time high and the NASDAQ 100 at an all-time high.
Yeah, I think we still see some real opportunity in those products that focus on quality. Again, just in the spirit of a little bit of a risk-off sentiment in the market. So something like VIG, which is our dividend appreciation ETF, or VYM, which is our high dividend yield ETF on the equity side, are really compelling. On the bond side, we can't help but note that active has had a really strong year in fixed income, reacting to kind of the yields going up and down and having some rate volatility. That the ability to think about active and bring that structure, that management style into the ETF has been really strong. We've seen the largest flows in active ever, 38% of the flows going to active ETFs, and fixed income is really a focus there. We're really happy with some of our products that we've launched in that space over the last 16 months. Our core bond ETF, BCRB, our core plus BPLS, and a product we just launched a couple of weeks ago, our multi-sector income, BGMS, are all products that we think give clients some additional opportunity to outperform the aggregate bond index in the near term. And that includes in July, where we do expect some higher volatility with the tariff delay coming to expiration on July 8th. Everyone's not really sure what the market might do next, even with July being a positive month. That could be interesting to see how that develops.
And those tickets you named, those were actively managed bond ETFs. Active management and bond ETF doesn't really, in my mind at least, doesn't kind of go together.
Yeah, I mean, that's somewhere where we see just, I think in the equity market, it is really tough right now to create an active wrapper that's going to deliver alpha in that space, because it's so top heavy. 32% of the S&P 500 market capitalization is held within 7 stocks. So, to see that around, 32%. So to see that, it's really tough to beat that market without including those 7 in the bond market with the just dispersion that you have of different opportunities, different offers. We do see that there's an opportunity there, as long as you focus on delivering a low cost product where you don't have to reach with additional risk to meet that yield. We think the active bond ETFs are a really good strategy for a lot of clients.
All right, and give us those tickers one more time.
Yeah, so I would say our, the 3 that I would highlight: our core bond, BCRB, our core plus bond, BPLS, and our multi-sector income ETF, which is BGMS.
All right. Dave Sharp from Vanguard, really great talking to you. Thank you again for your time. Thank all of you for watching, and please be sure to wake up and watch Worldwide Exchange every weekday at 5 a.m. I'm Frank Holland, anchor of Worldwide Exchange. Have a great day.